Have you ever had one of those weeks where the red line just keeps going down? No matter what you do, it just keeps going down. The screen you're looking at now is from April 18th. That's 2 days before my last Iron Condor expired. And if you remember from the last episode, I made the grave mistake of rolling down my call wing after the banks started collapsing. It felt like a smart idea at the time to take a more bearish position as the market started falling apart. But now here I am the day before expiration, and you can see that my portfolio took about a 10% hit from the last time I updated you. Now I'm only up about 9.5% on the year. And if we look at the position I'm talking about with the short call at 400, you can see where I'm taking that 166% loss. A loss of $563. This is a significant hit to my portfolio. When this position expires tomorrow, I'm going to be looking at a full loss, another $100, if SPY doesn't drop over 10 bucks. I don't think that's going to happen. So here, the day before expiration, I'm going to close out now and take this nasty loss before it gets even nastier tomorrow. I've made plenty of mistakes during the 3K challenge so far, but this is the one that hurts the most because I was really kicking ass before I made this one nasty mistake. But my portfolio is not completely eviscerated. I am going to be able to continue this challenge, and I'm just going to have to take this as a very painful lesson learned. Do not overreact when the market is moving against you. When you're holding an Iron Condor, remember that you've got time to make small incremental adjustments instead of going for one huge adjustment up front that could end up costing you later. But alright, that's enough of that pity party. Today is now Tuesday the 25th, and if you look at what SPY is doing, you can see that it's coming down quite a bit. Now, I want to know where this bearish action was at last week, because it would have really helped me out. But in any case, this bearish action has increased volatility within the market, and that gives us an opportunity to open up a new Iron Condor. So let's go to June 16th, that's a good month and a half out, and we're going to look around for our 16x9 Iron Condors. So we look on the put swing, and we're going to sell the 16 delta put. 370 is a little low, let's try the 375, and that's about almost exactly 16 delta. So we're going to sell that one, and then flip over to the buy side, and buy the 9 delta. It's usually about $10 out of the money. So the 365, the delta is a little bit high, but I think we're going to go for it because it gives us a nice round number to work with, and the volume will be higher. Now we need to set up the call wing the same way. We're going to look for the 16 delta call and sell it. So that's almost exactly the SPY 430. So let's go ahead and sell this one, and then we'll go $10 out of the money further, and that's going to give us the 440. So we will buy back the 440 at the 9 delta. Now this position together is going to give us about $212 premium, so it's just under the 25% of the total collateral. That's fine. And with volatility being elevated right now, I think this one is going to do really well when volatility comes back off. We'll have the Vega working in our favor. So let's go ahead and lock this one in. I'm not going to pretend there's any chance of us getting filled any higher than the bid, so I'll just put in for the 212, and let's see if we get an execution. Alright, welcome back everybody. Now look at my portfolio here. Year to date, we're still doing pretty good, up almost 13%. It is better than the S&P, but you can see that I took a real major bump right around here toward the end of March when I had rolled down my short call on the last Iron Condor, and that's what really hurt me. The one that I have open now, expiring June 16, 375 by 430, looking real strong. It's in a very good position. I got some time left and I'm right in between my strikes, up about 18%. Not nearly enough to close, but it is going in the right direction. Now look at SPY here, going down just below 405. That's a pretty nasty hit over the week, down over $6, $6.50. But with VIX increasing, this is an opportunity for me to open up a new Iron Condor, expiring about 45 days out as usual. So let's go ahead and trade SPY options. I want to trade about 45 days out, so we're going to go to the end of June. I don't want to go to the middle of June because that's where my other position is. It's my other Iron Condor. So we can go, let's do June 30th, give the full 60 days out. We're going to close at 50% once VIX drops, so this will give us plenty of time. Let's do the put side first, and we're going to poke around and sell that 16 delta as usual. Now that's usually going to be around where the chance of profit is about 84%, so let's look around there for a nice round number. Let's look at 370, and we are just below 16 delta, so that's a good one. We'll sell that put, and then we'll buy the 9 delta put. And let's poke around a little bit. Usually it's around $10 further. It's the 11. I don't want to go any further than $10 spread between the long and the short position. So even though the put here is really the 11 delta, it's going to have to be close enough. Now let's go over to the call side. And we're going to look for that 16 delta. Do we want the 430 or the 428? Well, let's check the volume. Neither of these are perfect when it comes to the deltas. But we've got 38 volume on the 428 and 97 on the 430. So neither of these are that good. I think we can take a shot and get a little bit more aggressive here. Get that extra 40 bucks. And we're going to sell the 428. It's going to be about the 17, what is that? Almost 18 delta. All right, then we're going to buy the other side and go to about the 9 delta. So we've given ourselves $10 of spread over here on the put side. We should look to do about the same over here. So let's look at around the 438-ish. Let's see what that looks like. The 7 delta, it's a little bit low. We can go over here to the 436. It's approximately the 9 delta, so that's probably the better option. It's going to give us a little bit of a skewed condor, and that's okay. Generally, that looks pretty good. So we're getting $214 credit. After the Robinhood fee, it's probably going to be about $208 credit. But our max gain, 220, max loss 780. Not horrible. It's pretty good. So we're going to go with this. We're going to open this up. We've got nice wide break evens. I think this is the position that I want. So let's continue. We're going to go with a good for the day order. I'm not even going to pretend that it's possible to get more than the bid on this. So let's do 215. Should get a fill here. We're going to sell this Iron Condor 215. And all we're doing really is waiting for VIX to drop. And there we go. So the position opened immediately. We've got $1,000 collateral on the line. We've got our nice wide position here. 370 by 428. It's really not all that different than what we have expiring on the 16th. So both of these positions will benefit from VIX dropping. Right now what I'm looking for is SPY to recover just a little bit. We've taken a nasty fall so far this week. It could get worse, but with some luck, things are going to turn around a little bit. We'll start bumping back up toward that 410 mark. VIX will drop. You might even be able to close out this Iron Condor that's expiring on the 16th. All right, here we go again. So today is Wednesday, May 17th. It's about 11 o'clock in the morning. And good news, I have finally figured out how to use dark mode at all times on the desktop version of Robinhood. So that's a big change for me and one I'm really happy about. But more importantly, if I go to my year-to-date chart, you can see that I have finally recovered above my snafu at the end of March, where I rolled down the call wing of my Iron Condor, really burned myself out of about 500 bucks. Now here we are 3 weeks later. I didn't trade with such panic over the past couple of weeks, and my portfolio has benefited from that. So when I rolled down that call wing, I really burned myself out of about 500 bucks when I shouldn't have. I should have done better than that. But that's part of trading. Sometimes you make mistakes and you use that TLS strategy that we all want to avoid. Now year to date, that puts me up 21%. The market has been moving sideways for a while. These are the ideal conditions to be selling Iron Condors. Now for some reason, I can't check the SPY year to date on Robinhood. It just doesn't do year to date. But if I look over on trusty old Google, we can see that SPY is up just over 8% on the year. So the portfolio is doing pretty well. I'm happy with this. And despite that big mistake in March, bouncing back pretty nicely. Now, if we look at the SPY Condor that's expiring on the 16th, still about a month away, I'm up well over 50%, in fact, close to 60%. Conventional wisdom would say close this Condor now. VIX has come off a little bit. Take your 60% gain and reinvest. And I'm not going to push it. I'm going to close right now. I'll close my one Condor, and I'm probably going to have to close at the ask. So I'll just do 89 cents to make sure that I get the close right now. All right, we close the shop. See if I can get a fill here. And we're filled. So my gain on that is going to be a nice $125. I'm going to stick to the plan and throw all my gains right back into QYLG. So with $125, it's going to give me about 5 shares. 129, it'll do. It's fine. All right, let's buy 5 shares. All right, there we go. Done. Now, the other Condor, the one that's expiring on June 30th, over here, it's not quite at 50% yet. We're at about 30. So everything's going according to plan. All I have to do is just wait, be patient. We've got SPY hovering around 410, 411. Got plenty of room on either side where these are not getting tested anytime soon. So there's no reason to really do much of anything right now. Just let it run. Once I hit 50%, I'll take the gain again. Now I want to re-emphasize now, when I'm opening Iron Condors, I want VIX to be high. That's when I'm going to get the most premium for the widest wings. Right now, VIX is about 17.5. That's not bad. You can open an iron condor here, but I've had a lot more success waiting for spikes above 20. So right now, I'm not in any rush to open up a second iron condor. I've still got the one open. It's still gaining value. If I see VIX rise up again above 20, that's when I'm going to open up my condors. So all these spikes over here, these are my entry windows. And so far, for most of the year, it's been working out pretty well. You just wait for it to go back down, and that's when you have an opportunity to close your condor. But right now, I'm really happy with the progress of the strategy I've been using. SPY keeps moving sideways. I'm happy to keep benefiting. You look at the all-time chart, it's really not that great. It's about 21% over 4 years. But if I continue to avoid the strategies that did things like this and this, then I'll avoid that volatility that's cost me so much money over time. As long as I just stick to the strategies that have been working since the beginning of the year when I reset my account, then things are going to continue going a lot better. If the market conditions do change, I'll have to change right alongside them. But until then, I'm happy to continue doing what I've been doing while I build out my share portfolio. But I need your guys' advice. Should I make 3K challenge videos more often? These trades are getting pretty long. You know, I could go 60 days at a time without closing a trade. This episode was weird because I'm looking at stuff that I did a month ago. So should I make episodes even if I'm not closing a trade? I'm just talking about what's happening in the market. Maybe that'll make the 3K challenge a little bit more timely and it's easier to keep up with. So let me know.